This is Chuck Crow, joined by Colin Keena. And Colin, we're talking a little bit about NADEX right now. We're projecting the NADEX platform up for everybody. And, one of the things is it's New Year's. So we don't really see a lot of activity on this screen. And Colin and I have talked about maybe doing another presentation when we get into 2014, early January, look at some of the items here, but we wanted to give you kind of an idea of what NADEX is and what are some of the things you're looking for. So you want to start with explaining what NADEX is to everybody?
Well, yeah. And first, am I coming in okay? Can everybody hear me all right? Looks like my volume's good, so it should be okay. Hanging out in
That's just in the way.
Hanging out in Chuck's new cool studio down here. My first time to be a part of the cool guys in the studio.
We let him into the studio.
They let me in, but I got to say it's a pretty nice little setup. But yeah, like Chuck was saying, guys, this is those of you who have been on the chat, been following us, been listening to us, you know NADEX by now. You know, you've heard NADEX, you've heard some mention of NADEX, you've heard how much we like NADEX and how much we see value, what kind of value we see in it. So I can really see us continuing, all the stuff that we've done this year. I can really see us continuing with our ongoing education, looking into more stuff. And it's really helped that we've had such a good following of people who have used NADEX, because right there, that's our feedback. That's the kind of feedback we like, that we want, is from people who are actually using the platform, giving us ideas, giving us strategies and stuff that they've used that we can, kind of look at and implement. And it's been a lot of fun. I've had a lot of fun with it. I know Chuck's had a lot of fun with it, and some of you guys out there, I know, have had some success and have enjoyed, trading with the NADEX. Yeah, Edwin, absolutely. Hey, and remind me next week, Edwin, when everything gets kind of settled down, we'll get all the information over to you about your NADEX, about your prize that you won for the NADEX competition. Edwin, actually, we had a NADEX competition a couple weeks ago that Edwin won, was the clear winner, and so we know Edwin's. I've picked Edwin's brain before about some of the strategies that he uses and stuff that he does, and that's, to me, what gives us value. That's what makes these, what we're doing, what Chuck and I are doing, and what I've done and what Chuck's done. That's what really gives us, I guess, a little hope and for the future of where NADEX is going, because it's because we're getting the good feedback, we're getting positive feedback. So, so sorry, kind of went off on a little tangent there, but I just felt like that was necessary to mention. But so, like I said, really, if you've been paying attention, if you've been in a DTI chat room, you know of NADEX. But very simply, NADEX is just it's the North American Derivatives Exchange is the full name of it.
Right, and one thing to keep in mind, I know we've got a global audience, although most of our listeners are from North America.
Mm-hmm.
NADEX is for U.S. residents.
Yes, right now, it being relatively new as far as an exchange, and by the way, it is its own exchange. It's not connected to the CBOT, to the CME, anything like that. It is its own actual exchange. Of course, it's NFA regulated, and all the different governmental bodies, of course, are going to be regulating it. But
and that's one of the cool things that makes it different than a lot of derivative exchange products that have been out there. This is a regulated exchange.
Mm-hmm.
This is their standards and practices that they have to meet that other derivative exchanges that have been out there in the past really haven't had to live up to. That's one of the reasons that NADEX is slowly trying to migrate out to the rest of the world, is they have an emphasis on they want to be a regulated exchange. They want to be upfront. They want to be clear, and I think it's a great thing. Now, what we're seeing, by the way, I think we got Roadmap running behind our NADEX platform here, and it's kind of popping up. You want to just close down the Roadmap and
let me see if I can Just minimize that.
Roadmap always wants you to pay attention to it at certain times, and right now the market is moving back down a little bit, 1838 in the E-mini S&P. So we're coming back towards that 35.50 open, 36 the open of the week. Although I got to be honest with you, the open of the week, it's Tuesday. We're closing out the year. Who cares about the week? But apparently, I guess a little bit of the market does, or maybe they care more about the day. Well, anyway, we're talking about NADEX right now. But looking at those numbers, one of the things that I've always been that I like about NADEX is I can take a look at some of these numbers up here, and you can see right in the middle of your screen, guys, you got a couple different binaries here. And by binary, what we're referring to is essentially a strike price, and the market's either going to close above or below that price. Right?
Easy as that. Right. Absolutely.
So when you look in here, the middle of the page, you see 1838, 1841, and 1835. That appears to be where all the activity is. So 1841, the argument is with the bid at 11.5, there's an 11.5% chance that the market will close above 1841.
Your bidding offers, you can think of it as a bidding offer, but you can also think of it as a probability of probabilities of the market reaching that goal, or the market staying above that number.
Right, and then down here at 1835, you're looking at the bid and offer here, 92.5 on the bid, 96 on the offer. So if we sold the 1835, saying that we think the market's going to close below 1835, and notice the cutoff time, it's 4:15 p.m., but that's Eastern time.
That's going to be Eastern time, all Eastern times, yes.
Right, so that's actually going to be the 3:15 cutoff. But if you sold that, you're risking $8 plus fees, and you're basically expecting the market to move down below 1835, that the weakness that we're seeing right now would continue. Now, if we do close below 1835, that's going to return $92.
Yep, you see it right there. You'll get $92 back, and with NADEX, guys, you see here on your order ticket, before you're even placing the order, before you even get in the position, you see your max profit, you see your max loss. Max loss is basically, you can think about it.
Well, you're going to have to take that price down a little bit to meet.
To meet that. Right, exactly. You can always adjust, but that's what it comes up. It comes up to the market price. So whenever I brought this ticket up, it got me into the market where I could get into the market, immediately. But like I said, the good thing about the NADEX, guys, good thing about it is that you know exactly how much money you're going to risk, and it's just like those of you who are involved with options. It's just like buying an option. Money's already taken out of your account. You have the option right now, and let's just get it to where I can actually get this trade.
It'll be about 91.
91. So if I take it down to 91 here, I know that I'm paying $9 for this trade. I'm paying $9 for this trade. It's going to come out of my account immediately, and then
and the fees are per round turn, roughly 90 cents.
90 cents, exactly, 90 cents per round turn, and it's capped, guys. With NADEX, you can see here, max loss $9. That's for a 1 lot. If I take it up to a 10 lot here, you see it's going to be $90. Obviously, just do the math there. It's going to be $90 with a max profit of $910. And that's where your exchange rates. They don't call it a commission charge. They call it an exchange fee. That's where your exchange fee is going to be capped for the first 10 contracts. So they really want you to trade multiples of 10. They want you to trade more than 10 contracts.
One thing I would say, though, is that a lot of people, Jeff points out, it's not a big outlay of cash to fund a NADEX account. You can open a NADEX account with as little as $100.
$100, absolutely. You can fund it with your checking account right there directly.
And just keep in mind, though, if you're trying to do a 10 lot on a $100 account, you're risking $90 here. Now, the reason that you only have to risk $9 or in this case $11 to get into this trade is because it has a low probability of succeeding.
Yes.
So understand what we're trying to accomplish. And by the way, why didn't you execute that trade when I said to do it? Look at this. We would be profitable right now.
Yeah. Oh, yeah. Look at that. Yeah, that's true.
And the other thing is you don't want to chase the market too far. But a lot of people have a problem with NADEX because they get into it and they risk too much. They want to go up and do that 10, 20 lot with a $100 account.
Yes, that's you see people all the time wanting to trade 10 lots in a regular futures account with a $2,500.
Yeah.
That's an excellent way. I mean, I don't ever say no to somebody who wants to do that. You can't say no, but you kind of want to see, where's the logic in that? I mean, that's a very easy way to go ahead and blow up your account.
It is. We have a great question here. Is there a fee for exiting early?
No.
So it's just $90 flat. That's for the round term.
I mean, everything there's going to be
executing 90 cents.
90 cents. Yeah. I mean, there is just the regular exchange fee, Jeff, but that's for everything. That's entering, exiting. You're always going to get charged that. Mm-hmm. You don't have to take any of these to expiration. Like Chuck was just saying, we're up a little bit. If I wanted to collect my $3 and go home.
Yeah, if he'd put the trade in when I said, look at that, you can sell it at 92, he could actually go ahead and get out at 91 right now, up to 250 contracts. You could get out at 91. Mm-hmm. You can see that on the bid.
Yep.
And make 10 cents. Okay, it's not much because it'd be $1, but you're paying off the 90 cents. So you make 10 cents on that, and look at this, more.
More.
And you're still waiting. You haven't executed the order yet.
Exactly.
So we may be a little bit late on executing this order, but right there's at 88.50. But when it was at 91, that's 10 cents, and it's 10 cents more than you had in the account to begin with. So you can look at it, and you can actually scalp out little bits like that.
Oh yeah.
Whenever I see a market that's kind of close to a number, I mean, it's reasonable to expect that this market, in this case, we open at 1835.50. We're getting close to the end of the day. Can it challenge 1835.50? Well, yes, no, maybe. But if you can get into that at, say, less than $10 and get out of it at about 15 or so, then that's a $5 profit.
Well, and think about that with all the intraday expirations going out throughout the day.
Yeah.
All the intraday plus the daily expiration. I mean, if you can collect $5, 10 times, 10, 20 times throughout the day, hey, that's a pretty decent day. Just kind of collecting these little premium trades. Just things that have high probabilities. That's going to cost you a little bit more to get in. Mm-hmm. But the probability that you're going to make, $10, $15 is very high. And again, like I said, if you multiply that a handful of times throughout the day, you made yourself a good $150, $200. I mean, again, that's nothing to write home to. But if you're,
it's a good start.
It's a good start. I mean, hey, and $200 a day in a futures market is a good start.
It's also a good way to play out some ideas. Some of the things that we talk about in DTI, tendencies that the market tends to do. We talk about it 2:30. The last trade on the market either tries to extend the range or head back to the open. Mm-hmm. Well, and let's see, I can't close that out. You got the mouse.
Oh yeah, we close it out.
But if you close that window out and look behind it, and let's look in here, and right now notice that the 1841 number is bid at 350, offered at 7. So if we make the decision, we don't think the market's going to be able to get below 1836, and we think it's probably going to try and make a run at the high by the end of the day, well, then you can buy that 41 at $7 by one contract. You're risking $7 here, $7.90. If the market floats back up to extend the range, which is one of the probabilities that you would expect to see, well, you got a winner there.
And you necessarily don't even have to wait for it to go to expiration. Is the thing. I mean, if you the example is, if we think it's going to try to get up to 41, but maybe not quite make it there, you're still going to be profitable because where the market is where your underlying market is right now, you can see it's closer to like a 50-50 type probability.
You've got 43.50 the high of the day. If you're going to go up to challenge 43.50, at some point you're going to be above 41. And again, as you said, it's a 50-50. So if you're trading at 1841, that NADEX derivative is going to be valued at $50.
Absolutely.
Or
so
50%.
Right, and if you can get it in, like I said, our example was we bought it at 7. If you can get up to 50, you still made, $43, minus your exchange fee. So that's, like I said, that's $43 in your pocket that you didn't have, all for, just seeing a market try to reach its highs today,
No, Jeff, I'm not really saying what I believe the market is going to do. I think it's going to bounce around a little bit, but I do think when you get to 230, the market has a tendency, as we know through the DTI methodology and through being in this chat room, has a tendency to either head back towards the open or try to extend the range. In this case, we're trading above the open from overnight of 1835.50. And you can see the opportunities. You got that 1835 strike for the market to come down to the open, and you have the 1841 strike, or even the 1844 strike. If you're going to go all the way up to 43.50, there should be some value in that if it starts moving before the end of the day. It would cost you $3 to get into that, roughly $4. And if it makes it anywhere close, you're going to be able to turn a profit on that particular trade.
Right.
Now, one thing to be aware of, though, time works against you. So it's a little bit tricky playing this late in the day. I think you can sometimes get great bargains late in the day, but
that's your good premium trades at the end of the day type stuff.
Right.
End of expiration for the intradays is absolutely a great time to pick up.
One of the things to keep in mind, though, risk and probability. Your probability of winning and your risk tend to go hand in hand. The lower the probability, the less risk you're going to have to take. The higher the probability, the more risk you're going to have to take.
Right.
So if we flip that around, what are the odds that the market closes below 1844 today? Well, they're pretty high. They're very high. You can't sell that. It's 0% probability it closes above 1844 according to NADEX. Now be aware that this is, it's New Year's Day, or New Year's Eve, excuse me. So we aren't seeing the type of volume that you would normally see in these contracts.
It's been a slow week.
But it kind of gives you an idea of what we're looking for. And derivatives are fun that way because you can sort of peg onto what we would consider key numbers.
Yeah.
The strike prices may not be the exact numbers we're looking for, but they're pretty close. NADEX does a very good job of setting the strikes.
Oh, they do an excellent job. I mean, and all those strikes for the weeklies, they'll publish those, coming on Sunday night. For the daily expirations, for the 4:15 Eastern expirations. Those will also come up on Sunday nights at 5 o'clock. So they do a really good job of taking the previous day's range, kind of, what any, good, analyzer of the market would do. And that's where they, are going to determine, their strike prices. And you can see, it's a pretty wide range. We went as far down as 1808 for the day and as high as 1865 for the day.
Right.
So there's going to be, chances that.
So it's basically double ATR.
And that might be exactly what it is. Yeah. So, but anyway, so that's so you see, we never even approached that 1865 number. We never even approached 1808. But earlier on in the morning, you probably could have traded those.
Yeah.
There would have been a market early in the morning. Or
on any other day, yeah. I don't know about today. I don't know about today.
Today, I mean, what I see today, this afternoon, it's, what time is it? It's 2 o'clock?
It's 1:53.
It's about 2 o'clock. I mean, for there to be about 3 different markets, 3 different strike prices, I'd say that's about normal for this time. Probably on a busier day, you'd probably, with a bigger range in your underlying, probably see maybe 2 more markets available.
We get into January, I think we're going to see a few more numbers as the volume picks up and the volatility in the market increases, and the opportunities are certainly there. The one thing I would say is always be careful with this. It may only be $100 that you need to fund an account, but it's still $100.
Yeah.
And you're still putting it at risk. And guys, just to be clear, it is a lot easier to go through a $100 account than it is to go through a $10,000 account, because you really think more about losing that $10,000. The $100. I mean, you and I have both done this. We've both gotten in there and wiped out accounts just trying out ideas because it's $100. No, so what? And that's one thing you do need to be careful of. You don't want to get kind of that cavalier attitude. We get to have it because we have to try out theories and see how they work, and you can always put the money back in. So it's no big deal from that standpoint. But for those of you who that $100 really means something to you, understand if it means something to you, it means something to you. So you don't want to just get in there with a cavalier attitude and throw things around. But look at what we're talking about here. Here's that 18. What do you expect to see out of the market? These are some of the things we normally expect to see. This is up to now a $10 bid. If you had bought that on the $7 ask, it's worth $3 right now, minus the 90 cents.
Right.
$2.10. It's not a lot, but if you can get through and just grab a dollar, grab two, $2 gain here, $2.10 gain. Well, 10-cent gain now. It's backed off. So you aren't executing the orders quick enough. You got to execute them as I call them. But that little gain, if you have a $2 gain on a $100 account, that's a 2% return.
That's a 2% return. Absolutely. That's huge.
Right.
Yeah. It's not huge by any means whatsoever.
Well, no, but if you can make 2% a day, and just add that up,
it all adds up. Yeah, just like everything. A win is a win, as they say.
Yeah, and if this is a little bit tricky for you, if the derivatives are a little bit tricky, you can go into the bull spreads. Yeah, which I really like the bull spreads.
Let's take a look. Let's take a look at what we can see with bull spreads. Before we kind of transition, guys, is there any questions about anything that we talked about so far? Binaries, Chuck's Cool Studio. What anything that we've gone over, guys? If you have any questions, don't hesitate to ask. I'm going to kind of transition in here into our bull spreads. So let's bring up one of those markets real quick, and we'll just stay with the S&P.
And meanwhile, I'm going to take a look, and in about 3.5 minutes, we'll be saying Happy New Year to much of Russia.
Ah, Mother Russia.
Olympians probably over there right now.
We probably do have some Olympians ringing in the new year, don't we?
Over in Sochi. Anyway, let's get back to the bull spreads, which these are kind of interesting because you have a set area that the market's looking at, and usually there's some overlapping going on. So taking a look, this is the E-mini S&P, or they call it the US 500 because they don't want to, they keep the cost low by not infringing on naming rights.
Exactly.
So the US 500 March contract, and you can see the top one there, 1840 to 1880, which essentially what that's saying is that we expect the market to close somewhere between 1840 and 1880. You can buy that right now at 1840.4, and if I'm not mistaken, that's going to be a $4 risk. It's $1 per decimal.
Yeah, per little tick or pip or whatever you want to call it. But yeah, $1.
So $4 risk, and if we close anywhere above where you buy that at 1840.4, that's going to return a profit.
Yep.
And one tick covers your commission, covers your fees.
That's all you need is one tick to be profitable right here.
Now go into a few other of the binaries, the 1820 to 1860. That one's going to be a little bit more difficult because you're kind of right in between there. If you buy that, you got $20 worth of risk either side.
Yep.
So that's probably what I would try and avoid. But then coming down the list, you got the 1840 to 1800.
Yeah, this is your one. This is the one right here that I would consider looking into as a sell.
Right. And if you're of the belief that the market's going to move back down to the open, then you can get into this, get $22 risk. Now, the max profit, I think, is always a little bit misleading here because we're not really expecting the market to go down to 1800.
That would be a huge move.
It would.
That would have some.
It would. But if we go down from 1837.50 to 1835, it's a 2.5-point move. And again, the decimal is what we're looking at. That's just $25.
That's $25, yeah. $25.
So that's the kind of thing that we want to look at and see if we can find things that make sense. And one of the things that I really like to do in this type of a situation, if you're not sure what the market's going to do, and we happen to sit up right on those numbers, like earlier today we're trading right at 1840, you can actually get into that 1840 to 1880 going long, and then sell the 1840 to 1800, and essentially your worst case scenario is the market closes at 1840. If it rallies to set a new high, you're going to be profitable on one side and lose money on the other, but hopefully the winner makes more. And if it sells off back to the open, you're going to lose money on, you're going to lose that $4 on the 1840.4, but make money on the other side. So you can do a lot of spreads in this type of
You've effectively edged yourself, at that
Right.
point. 100% you've edged yourself, and that's one of the things that I
straddle.
really like. That's really what I like doing,
Mm-hmm.
with the bull spreads. Yeah, that's where you can find a lot of value. And the thing is, guys, we're on the binaries. It's either you're 100% wrong or you're 100% right. On the bull spreads, you can be wrong, but you're not 100% wrong.
Right.
If we get into this trade right now and I sold it at 37, 37.80. Yeah, is that what I sold for? 77.80. So say the market closed at 38.
Yeah.
I'd lose $2.
So $2.90.
So I would get back. So I can still be wrong. I can still be wrong on my on the
trade.
prediction.
Instead of losing the $22, you're only losing $2.90.
I'd only lose $2.90. So it depends on where the market closes. The only way that you're going to go to, the only way that I would go to max loss is if the market closed above 1840. Anywhere below 1840, and I'm still getting a portion of what I paid for back.
Right.
So it's not a full loss.
Which is a little bit different than a derivative that is, it's a 100%. You're either above or below the number.
Right. Yeah.
Right. So now a couple of other things you can do, and what I like to do here is I like to go back to the derivatives. I really love the idea of what we can do with the bull spreads, the straddles, as Charlie's pointed out, and I like to use the derivatives to make those type of trades.
Yeah.
I can say buy the 1841 and sell the 1835. And then that's essentially a straddle there. So if the market goes up to set the new high, I'm going to lose a little bit. Like we were looking at trades that would have cost $7 to get into the long position and $8 to get us into the short position. If you had both of those on, you have $15 at risk. And if the market closes outside of the range of either one of those numbers, you're going to make that up big time.
Oh yeah. Oh yeah.
So
and you guys, I know that Chuck and I we've been at this for, using NADEX, looking at NADEX for, over a year now. So these kind of things, this kind of things that we're talking about, these kind of ideas that we're kicking around is stuff that we've done in our own accounts before. I've done exactly that in our own account. So, you can see the value, and it's really neat having somebody like Chuck up here who has numbers, who knows the numbers, who makes his living, doing the numbers.
Yeah,
and it's
apply just the DTI methodology.
Yeah, oh yeah.
Jeff Smith, Tom Busby, Charlie does a lot of this stuff.
Yeah.
So you're going to be able to get a lot of feedback on what we all expect to see from the market, and be able to turn that into, take a shot. And with NADEX, the shot is not that expensive to take, and I think that's really the big thing here, because a lot of people want to get into. I know. Charlie, you know this. There are a lot of people out there that would love to buy Apple,
Right.
But if you're buying an option in Apple, that's a $500,000 position, isn't it? I mean, it's huge.
Yeah.
So how about we go and we look at the U.S. Tech 100 and look to play that in NADEX, and we get to have the impact of Apple because it has such a big impact on the NASDAQ.
Right, absolutely.
And we do it at a much, much lower cost basis.
Exactly, yeah. Everybody hears about how, you got to be an Apple, got to be an Apple, got to be an Apple. What if you don't have a $500,000 trading account to be able to, play around with Apple?
And there are certainly ways around that, as Charlie would point out.
There
are
of
ways
course,
to work out the margins.
Of course.
But it does take a big bite. And the margin requirements are what's going to get you. We aren't talking winning or losing on the trade. Just the margin to get into the trade, is one of the big steps there.
Absolutely.
And the same's true of looking at futures contracts. An S&P futures contract, $50 per point, trading at 1838. That's a $80,000-$90,000 contract. Whereas this NADEX contract that we're looking at, it's a $100 contract with the derivatives.
Right.
So in these spreads here, you're looking at a $400, the bull spread. It's a $400 contract. So that's significantly less than what you would be looking at with the futures contracts.
Absolutely.
And it's a good first step, kind of gets you into paying attention to the numbers, how they play out, what we expect to see, the market performance. The whole idea of this 230 trade, which it's 204 right now, so that's going to be coming up pretty soon, and we're balanced right here at 1837.50. And is the market going to go back to 41? Is it going to go down to 35? Well, we'll see. Right now, though, it seems like it's not really betting on being up above 1841. You can see that spread right there.
Yeah.
It's another thing you can do. Use this as an indicator.
Absolutely.
Because a lot of times you see those probabilities start to tick up, and then the market moves. People know something. And you can kind of see that when you look at some of these NADEX contracts. But also, a lot of people love to trade Forex.
That's exactly what I wanted to try to read my mind, because that's something that we really, I think the whole Forex aspect of NADEX is something that's been severely overlooked. I mean, Forex is it's kind of one of those things where a lot of people think you have to be some sort of guru in the currencies, or have to be some sort of, specified, special type of trader to get into Forex. And it can be a little intimidating, talking about all the different currencies and the currency pairs and stuff like that. And, along with that, most places require you open up a separate account and fund a separate account to even trade the Forex.
Let's take a look at.
So that can be a very kind of daunting task when looking to try to get into Forex. But with NADEX, you got
do Forex binaries weekly on the Euro US dollar.
Yeah. Binaries, Euro USD. Let's see, got a weekly coming up.
Right, and
there it is.
This is mainly something that you might want to look at maybe next week, right before the ECB meeting.
Mm-hmm.
Now, what does the euro typically do before the ECB meeting? It typically goes up a little bit, right? So when we look over here, we have the futures trading at about 137, and you can see right around that 137.225 area. See where you're at 58.5, 64.5% on that line. 1.3725. So that's right in there. That's effectively where people are expecting the euro to be. Now, this is the weekly, so it doesn't expire until Friday, and notice it's 3 p.m., so it'll be 2 p.m. on Friday. Shows you the expiry date, which will be the 3rd of January. And what we can do is we can step over and look at, well, what happens if the euro rallies. Now, this expires Friday. We want the one that expires next Friday, which we'll be able to see, as you said, Sunday night. But you can go in and effectively buy a 139 here for $5. And, I don't expect to see anything this week, but next week, if we have this same sort of setup, if you're expecting the euro to climb up in front of the ECB meeting, which is Thursday morning, and you can get a decent price on a level there early in the week, you can sit back and let the market work for you. Now, you probably also want to be out of that trade the morning of the announcement, or maybe a little bit before that.
Yeah, probably.
But, test out these market theories, and if the theory is the euro rallies before the ECB meeting, spend $5, figure out if that's true.
Yeah.
Now, again, this is predicated on what the market looks like next week, and we'll reevaluate then. But just wanted to kind of get a look at what possibilities there are. And you can see there are a lot of possibilities. I would say, though, be careful. Because, again, a lot of times the big problem that people get into with NADEX is they don't take it seriously enough because it costs so little to get into. There used to be I'm trying to think, there's a saying about how much appreciation you have for something depends on how much you pay for it. and a lot of that is kind of true. They don't really, a lot of times when you see the conversations about them, they really get into, especially when they're talking to us. Remember, they're talking to us, and we're primarily futures traders, so that's where they go. Now, when Chip and his group are talking to Forex traders, they bring up the Forex a lot more often, but it is worth looking at. And
what I'm doing here, guys, is just kind of showing you along with the Forex, with being able to trade the binary price, or being able to trade the NADEX price of the binaries, they actually will give you the spot rate. They'll actually give you the actual indicative index of the Euro, USD, or any of the different, so any of the different currency pairs. So if you're going to trade the Forex on NADEX right there, and you can see what I was doing here, I would add all of the underlying indicative indices that you're going to watch to a watch list,
right,
and then be able just to filter through your markets, have your watch list consist of all the indicative indices, and then just be able to filter through your different markets that you want to trade on. So it's right there. It's essentially you have a Forex account right there with you, right there for you, inclusive with your NADEX, with the rest of your NADEX stuff. So pretty neat stuff.
And just be aware that with the time, everything is quoted Eastern time.
Yeah.
I want to stress that again.
Yes. Can't reiterate that enough.
All right. So anybody have any questions? No? Quiet group?
Everybody ready for some champagne and some toasting, huh?
Oh, and Happy New Year to our friends in Russia. That was 11 minutes ago.
Happy New Year, Ruskies.
And Olympians.
And Olympians. The Sochi bound.
Yeah, although I doubt that the Sochi crowd is listening to us right now.
Well,
there's probably a big party going on.
You never know. I mean, I've got a lot of contacts in Russia. Being an international broker to the stars, we tend to have a lot of contacts in different countries. And I'm just joking, by the way.
Yeah. No, Jeff. As far as those spreads there, the 2/3 rule. Generally, no. I mean, the spread, it is what it is, and I've tried to go in there, like go 2/3 up and try and get a fill, and oftentimes what you'll find is that the market will tend to leave you behind, especially when you're in light volume type situations. Right. If you want to buy the 139.25, you're going to pay $5 for it.
Yeah.
So
I mean, it's best. I've found, I've tried to split the difference and all that kind of stuff that you're taught to do, that you are trained to do, and sometimes that is possible. It is a viable option, but most of the time it's just going to the market.
Yeah,
it's just getting in right there when you see something. Best to just go ahead and get in the market. You might lose a couple dollars here and there, but sometimes just getting in the trade is more important than where you get into it. A lot of so.
Right. Now, if we go over to something that has a little bit more volume, like the S&P 500, you probably can split a little bit there.
Especially if you're placing the trade, when it first comes out, when it's 5 o'clock the previous day open, when it's 5 o'clock open, or when it's 8:30 day market open. If you're in early, you might be able to get away with using the 2/3 rule, but if it's perfect example is what we just saw, the two examples we first brought up. Yeah, I hesitated. If I would have gotten into the market when Chuck told me to,
we would have been able to show you guys a profit on
we would have made a couple bucks here. So that was an instance where if I would have sat there and tried to play the difference, play the middle, would have been left in the dust. Whereas just getting right in when we saw it, we would have been able to collect a couple bucks here and there. So it just really all depends. Really depends on your time. Really depends on the kind of volume, what time of day, all the things that DTI method teaches.
Okay. Let's see. And sounds like we have the method down. No, I mean we're still experimenting with we're still having fun with it.
That's that's part of the fun. That is part of the fun. I've got methods that I've employed that have worked pretty well for me. Chuck's had some really good ideas and stuff as well. But are we ever 100% right? Of course not.
Well, and the other thing is that the volatility shift that we've seen in the market has sort of confused things, and you have to approach the market a little bit differently. I had a great trade that was working incredibly for about 3 months, and then it just dried up when the volatility dried up. And
What's your Dow trade?
yeah. I've got it written up for the key numbers class in the slides, and I was getting ready to put it into the manual, and it stopped working. And I was like, "Whoa, that's not getting in the key numbers manual." But it's still in the slides, and I still look to it and look to see if that opportunity is there. It's just not there as often as it used to be. And markets change, markets develop, and you got to be able to adapt with them.
Maybe something to maybe start looking at again after the new year.
Oh yeah, I think when you get through the first few days of January, typically I look for some of my better trades starting around January 20th, towards the end of the month, because at that point you have enough trading days to offset the very low volume that we've seen over the holiday.
Gotcha. Makes sense. Makes sense. Not. Yeah, guys. Any more questions?
Now we're going to come back on Thursday with the radio.
I don't know if did we decide that. I mean, I don't mind. I like it. I mean, this was fun.
Yeah. The only problem is we'll be breaking every 10 minutes for commercials, but other than that, yeah,
that's okay. Hey, no.
And we won't be able to show everybody the screen, so
we can just talk about it.
We'll have to talk about it. We can show the chat room the screen, but
yeah,
we need to make sure that the listening audience can actually.
I think we'll be able to. I think we'll be able to, between the two of us, Chuck.
Yeah. I've often said things like, look there at the S&P, and then I realize you can't see it. Okay. Unless, of course, you get the DTI Trader app at dtimarketbuzz.com/app.
Bang. There you go.
Promotional item.
Problem solved.
But then they wouldn't be able to see NADEX. They'd just be able to see roadmap.
Well, baby steps, Chuck.
Yeah.
Baby steps.
All right, so guys, thanks for attending. We'll be back in about 14 minutes with our 2:30 number, and go ahead and call it a day for this presentation.
Yeah, thanks for your time, guys. We did record this. If any of you are interested in recording, we'll probably have that. We'll probably post that here maybe this afternoon or maybe Thursday. I'm not sure if everybody's has checked out yet. Chuck and I are still here. But
we're going to open the door and find.
We're going to open the door. Yeah, we're going to open the door and find the rest of the house empty. But that's okay. But anyway, thanks, guys. I enjoyed this. Chuck, I enjoyed this. This was fun. This was cool.
It's a nice setting, isn't it?
It beats. This is a cool little setup you got here, and it sure does beat having my headphones on and being stuck inside my office doing these presentations. I really did enjoy. The conversational type tone, and guys, I mean, I think this was a pretty good presentation that we did, and look forward to us continuing to do these things in 2014, and
we'll put something together in early January.
Yeah, I think
a little bit more formal.
We'll do something more formal, but I think it kind of the spontaneity of us just kind of having a conversation really worked pretty well. And
at this point, let's go ahead and say goodbye to the people who are listening to the recording. You guys have a great new year, and see you next year.
Happy New Year, guys. Take care. Thank you for your time.